Hello everyone. Welcome back to the channel, where we simplify business, finance, global trends, and investment insights. Hello everyone. Today, we're diving into the remarkable life and career of Warren Buffett, one of the most successful and revered investors of all time. Known as the Oracle of Omaha, Warren Buffett's journey is a powerful testament to the importance of patience, discipline, and the pursuit of long-term value. His story is not just about wealth, but about making smart decisions, taking calculated risks, and building a legacy that transcends money. Let's take a closer look at how Warren Buffett's early struggles, business decisions, and deep sense of social responsibility shaped his incredible path to success. Warren Edward Buffett was born on August 30, 1930, in Omaha, Nebraska. Growing up in the Great Depression, Buffett witnessed firsthand the impact of financial hardship. From a young age, he exhibited an uncanny ability to grasp concepts around money. At 11, he bought his first stock, 3 shares of Citi Service Preferred at $38 per share. His investment would eventually grow, but not without early lessons on patience. The price of the stock initially fell, and Buffett nearly sold it at a loss, but instead held on until the price rose, teaching him the first of many key lessons in investing: the value of patience and long-term thinking. Buffett was always a voracious reader, a habit that helped shape his investment philosophy. He spent countless hours consuming books on business, investing, and economics. By the time he graduated from the University of Nebraska, he had already mastered the basics of investing. After a brief stint at Columbia Business School, he learned from his greatest mentor, Benjamin Graham, the father of value investing. Graham's philosophy taught Buffett to focus on the intrinsic value of a business and to buy stocks only when they were trading for less than their true worth. After completing his studies, Buffett returned to Omaha and started working at a small investment partnership. Despite facing early financial struggles, his keen investment strategies slowly paid off. But it was in 1962 when Buffett's real turning point came. He took control of a struggling textile company called Berkshire Hathaway, which would later become the cornerstone of his fortune. At the time, Berkshire Hathaway was not a highly regarded company, but Buffett saw an opportunity to turn it around. He had the foresight to buy undervalued businesses, and he gradually moved Berkshire Hathaway away from textiles and into investments that would eventually lead to its tremendous growth. Buffett's strategy was simple yet revolutionary. He focused on investing in businesses with strong fundamentals, competent management, and the potential for long-term growth. One of his first major acquisitions was See's Candies, a company he purchased in 1972. Under his leadership, See's Candies grew into a highly profitable business, but Buffett's real genius lay in understanding that it wasn't just about selling candy. It was about acquiring a business that produced steady cash flow with a strong brand. Over time, Buffett's Berkshire Hathaway portfolio grew exponentially, encompassing industries ranging from insurance to railroads to energy, with major stakes in companies like Coca-Cola, American Express, IBM, and Apple. However, Buffett's success didn't come without its challenges. He faced a significant test during the 2008 financial crisis when the global economy teetered on the brink of collapse. While many investors fled the market in panic, Buffett saw it as an opportunity. In what became known as the Buffett buy, he invested billions in companies like Goldman Sachs and General Electric, capitalizing on their low stock prices. Buffett's ability to see through short-term market panic and focus on long-term value is one of the hallmarks of his success. His investment decisions weren't just about making money. Warren Buffett became known for his ethical approach to business. He always emphasized the importance of integrity, telling investors, "It takes 20 years to build a reputation and 5 minutes to ruin it." He also made it a point to treat employees and customers with respect, believing that ethical behavior in business is just as important as making a profit. As his wealth grew, Buffett began to think about his legacy. While he could have lived a life of luxury, he chose a different path. In 2006, he made a landmark decision. He announced that he would give away the majority of his fortune to charity, with most of it going to the Bill and Melinda Gates Foundation. Buffett pledged to donate more than $37 billion, a decision that demonstrated his commitment to using wealth for the greater good. In his words, "If you're in the top 1% of wealth in the world, you should start thinking about this: giving back." Buffett also inspired others in the business world to follow suit with the giving pledge, encouraging billionaires to commit to giving away at least half of their wealth. His efforts sparked a global movement of philanthropy, proving that wealth, when used responsibly, has the power to change the world. Today, Warren Buffett stands as a symbol of financial wisdom, ethical leadership, and selflessness. He is one of the wealthiest individuals on the planet, yet he still lives in the same modest home he bought in 1958. Buffett's humility, despite his immense wealth, is a testament to his belief in simple living and focused investing. He's often quoted saying, "The stock market is a device for transferring money from the impatient to the patient." As Buffett's business journey continues, his story remains a beacon of inspiration for entrepreneurs, investors, and philanthropists. He proved that success doesn't require flashy moves or shortcuts. Instead, it's about finding great businesses, buying them at the right price, and holding on to them for the long term. And perhaps most importantly, he showed the world that true wealth is not measured by the amount of money one accumulates, but by the positive impact one can make